Day for any of you technical chart geeks out there, you are going to be in heaven over the next 60 minutes or so, because we've got the chart gurus with us. Gary Glover from Novus Capital, Carl Capolinga from Think Markets, and it's all about black candles, white candles, head and shoulders, friggin' everything. So I love it. So we've got a great hour ahead of us. Gents, welcome. Carl, are you ready to get into it?
Yep, ready and raring to go, Koshi. No, it's a good fun to be on another TA show.
Yeah, and sort of your partner in crime here, Gary, you're big on the charts as well, aren't you?
Yeah, probably like Carl. We could probably talk about them all day, really. So,
Yep.
yeah.
Well, we'll try and limit it, everyone. You know, I think we've all got a limit on charts except for these two. Anyhow, what we're going to do is that we've asked the guys to come up with 5 charts each, and they'll look at their chart analysts, give their view on 10 companies, and then the other one will briefly give their view following on, even though it hasn't been a chart that they've put up. So we're going to kick the first 5 stocks off with Hawson Iron from Carl. Gary wants BHP. Carl wants us to look at Chalice Mining. Gary's got Fortescue, and Carl has got Lithium Power. But we'll kick off with not a stock of the day, but a chart of the day. And Carl, you're going to bring up the ASX 200. What's it telling you at the moment? Because the market's a bit all over the place at the moment, isn't it? It's a bit fragile.
Yeah, well, it seems to be hero is zero. I mean, the up days are, really up days. You get these white candles. So you start low, you close high. When you close high, so white candles, you get that. When you have a white candle, it's because you've got a lot of confidence. So there's a lot of demand side confidence. You close near the high, and then the black candles are the opposite. You open high and close low, and there's a lot of supply side confidence. So it just shows how tough it is right now for me as a trend following technical analyst. And I think it's important to let viewers know our different styles. So Gary's got a slightly different style to me. Look, not adverse, complementary, but different. So I'm more of a trend follower. I'm very much reactionary. So I need to see a trend established to the upside before I jump on, or to the downside before I might even go short. I'm not trying to predict what's going to happen. I'm just trying to follow where the money's going. So when you get that chop and change, the white candle, black candle, white candle, it does get very, very tricky for a trend follower. But I do think the overall trends are down, and that's why I don't just use my candlesticks. I bring in 2 other key factors, and these are price action. So I use peaks and troughs. So the way you get, for example, higher peaks and higher troughs, obviously the peaks are the bits that look like an A on the chart, and the troughs are the bit that looks like a V, okay? Yeah. Higher peaks occur because you are removing supply from the market. You're taking out supply. Higher troughs, you are increasing demand. And if you've got less supply and more demand, the price will go up. Turn that upside down for the downtrend. And then I'm using some longer term indicators in there. They're my trend ribbons. So you can see sort of the dark pink and light pink zones. And those ribbons I'm using for them support and resistance, as well as just the trend. So
what about the green things on the right there, though? Sort of you don't just have, I can follow the one colour, but then when you've got green and red and pink, I'm thinking, what the hell?
Okay, well, it's like a traffic light system, basically. So your green is go up, and then orange would be caution. So you can see, even if you go back to as the market was turning from, I guess, making new highs, you can see how it flattens out, and then we go into orange. So we go dark green, orange, and then you can see it goes red. So we're in that red zone now. I think this is where I'm getting to the point of it. We're still in the red zone. We're still... as in, I mean, if orange is caution, start to reduce your holdings and go more to cash. Red is, really have high cash levels, and that's what the technicals are saying to me right now with those sort of red or dark pinks in place. Okay. And then basically there's a green. I think you're referring to the green zone between sort of 67, 64, and 67.15. That's an area I see where there's potentially demand. Right. So green is okay. Think that where it might go up. And reds and pinks are where it might go down. So we're in a key zone now. If we break through the bottom of that, we're having a little rally today. If we break through the bottom of that, then I think we'll go down and test those June lows at 64.07. Oh. I think that the balance is swinging more and more to the downside. So much so, Koshi, that I put out on my Twitter last night a list of short sell opportunities for the first time ever that I've put it out. And of course, today's an up day, so I knew that was going to happen too. I knew I was going to signal the bottom of the bear market by putting that list of shorts out for the first time.
All right,
so you're welcome. You're welcome, everyone.
Okay, this is a chart of the ASX 200 on September the 19th. The makeup of the ASX 200 is going to change. You're going to have a whole bunch of stocks drop off and a whole bunch come on. So does that bugger up your chart?
No, look, I don't think so. In the long run, I think the answer is, I can say confidently no.
Right.
In the short run, look, here's the thing though, they tend to take out the really bad ones and put in the really good ones. So that can artificially inflate the index as well. But I do have, well, it does. And I do have some other methods as well. Often I show on AusBiz, I show my market breadth chart. So that's looking at the number of stocks that are rising versus the number of stocks that are falling. So those other measures won't be affected by that.
Yep. Gary, do you agree on the ASX 200 chart there, the trend of cars?
Yeah, I mean, look, it's, I mean, on that sort of the structure there, you find actually that the ones that come out are really a small weighting as well. So, I mean, it's almost like the S&P, when it was sort of pretty much in the top, your heavyweights were really, I think they might have made up, top 10 might have made up 80% of the index. So it's sort of similar in Australia here. The big lot do all the heavy lifting, and the ones that get thrown out are a small percentage. Right. New ones that come in a small percentage again as well.
Little fish. Yep.
But no doubt for me, I mean, to me, look, I'm looking, I've been pretty bearish this year, so all the charts I've been presenting this year have basically been showing this is a bit of a bearish cycle. Obviously the interest rates heading up, initially sort of a shock markets initially. So to me, the question we've got here is are we going to get a new low here? Or are we going to get a high low sort of in October? So all the cycles are basically pointing down currently. Did see, interesting last night, I think the put to call ratio in the States was around about 5-1, which was like the biggest ratio in terms of options skew we've seen in about 10 years. So it just meant that everyone got short yesterday.
So like Carl
and then we've and then we've had a bit of a spike here. So it probably just needs to, it'll probably bounce, wash a few of the shorts out here. They'll cancel again, and then we'll come back.
But
down
the longer trend, forget the 24 hours, you'd be like shorting like Carl is.
If you look at the downward structure of trends, you don't just go down in a straight line. There's plenty of sort of counter moves here. So just needed a bit of a bounce here just to.
Okay, for our market is very much focused on commodities at the moment, energy. You've got a chart for a chart of the day, which is a CRB commodities index. Talk us through that.
So at the moment, you've got the US dollar is on an absolute tear at the moment, so it is super strong. So normally,
the English pound is at its lowest level since the 1980s.
Yes, the US pound is, and it looks horrible. It's weak as the structure of that trend looks really weak. Looks like it's got further to go on the downside here. So
that's after the British energy regulator increased the price cap on a household's energy bill by 80%. That's only households, not business. Business got the whole increase. That's horrible.
No, it's pretty horrible in the UK there. Look, what you see there on the CRB index is off that high, you see a really impulsive move down, and then we've had a bit of a bounce here in what we call like a pennant or a flag sort of situation. So that's just like a what we sort of like call a continuation pattern. So it's a bit of a pause in the trend. So impulsive down, a bit of a overlapping continuation pattern, then you get another leg down here. So I think the CRB index might have actually already popped through the bottom of that. In the last, maybe in the last night. But normally, that's, if I saw that pennant flag on the XJO, I'd short that 10 times out of 10.
So you'd be shorting commodities.
It's a bearish pattern at the moment. So it's quite negative here in the short term that's the commodities basket. So it doesn't mean every commodity will go down. No. Just means a lot of them or a majority.
Is it dominated by one or
no, well, look, oil probably has a big, oil does have a bit of a weighting in there, but it's just a basket of them all, so it's all the hard and the soft commodities.
Right, okay. All right. So bearish on commodities overall, but again, this is a basket. You've got individual ones.
Just fits in with the macro too. So what's, you've got, typically when the US dollar is really strong, commodities generally aren't. Right. So you think about when the Aussie dollar's generally very strong, commodities generally are.
Right.
So,
okay.
yeah.